The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
Welcome to the Stock Market Authority Podcast. I'm Bakes, Kevin Baker. I'm going to teach you how to make money in up and down markets. Very few podcasters or coaches cover this. I'll show you how to lock in profits and minimize losses to make you a better investor. So once a week, you're going to know what's going on in the world and the stock market. Welcome to the Stock Market Authority Podcast. Good morning, it's Bakes, Kevin Baker, Stock Market Authority, Wednesday, last Wednesday of July, which blows my mind. We're going to talk about today, our top story is ARK, ARKK, Ark Innovation, come sail away. Here's hoping Cathie Wood makes money over the next 5 years. This is going to be controversial and a hell of a lot of fun. Open the mailbag, and we're going to talk about Photronics, Domino's Pizza and Mattel, given the Barbie launch, and we're going to go through the portfolio. I'm the only masochist that's out there that on this podcast says, oh, by the way, here's exactly what I'm investing in. I try to find the 10 best ETFs to make money every single year. So far, we've done it. We were up last year when everybody else was down, and I'm working my tail off to keep the streak alive. But today's top story. I bought ARK. I put this out on the newsletter a little while ago, and I posted it. And ARK Innovation, ARKK, is Cathie Wood's flagship fund, and became famous by having a meteoric rise. I'll talk about the chart, but basically a meteoric rise during the pandemic, a subsequent crash when interest rates came down, and is a lightning rod for a lot of people. And I'm using this as a teaching moment to all of my student-managed investment fund friends and all my folks at the University of Houston MBA program, because I think this is instructive. I've been doing this a long time. And by checking my my emotional baggage at the door, see Miranda Lambert, it's helpful. So here's what's going on with ARK right now. This is the weekly chart, and I've got these arrows written here. So let me give you the history a little bit, okay? First of all, I was chuckling. Jack, my son, I sent this to my sons, Jack and Bobby, who I do this for, and Jack came back to me with a text saying, really, Dad? She's your arch enemy. If you can't beat him, join him. And I came back with, as I do, the charts have spoken, and this is the benefit of not having baggage. And I mean this really seriously, and that's half the reason why I'm bringing this to light, because I think it's really helpful. Here's the recent buy was triggered by, and I'm watching this all the time, but here are the arrows from the left to the right. The first one is the 50-day moving average breaking above the 200. And so you can say anything you want about Cathie Wood. She doesn't know about valuation. She doesn't have a sell discipline. She wrote everything back down. Okay, true, but the trend changed. Now, the 200-day is the next arrow. The 200-day started turning up. And I mean by a penny. And so I go, okay, check one, check two. And then I see this breakout into new intermediate highs. I don't think it's 52-week highs, but intermediate highs on big volume. And I say, that's my buy. And that's how specific my buys are. New intermediate high, 150% increase in volume. And then I want to be right. And if I'm wrong, I'm going to be wrong by 15%. I sell everything. If I see down 15% on my statement, I put it away, because that enables me to do what I just did. I was very critical of Cathie Wood, very critical of ARK, but I'm here to make money. And so if I don't lose a lot of money, I can be free psychologically to get back in the game when things change. So that's what I see in this chart for the buy, and I'm really working hard to have you see what I see. I think this is so obvious I can see it from 3 city blocks, but I understand you didn't go through the 87 crash. You ever, read the hundreds of books that I've read and gone through thousands of charts for 25 plus years so that my eye is attuned, almost Pavlovian or Darwinian response to how the market works. So I might teach a course down the road. Come back to me if you want to learn how to read charts, especially if you're steeped in fundamentals like the University of Houston folks, the Bucknell Student Managed Investment Fund. I'll teach you the technical part, and the technical part will save you a lot of anguish and a lot of money and a lot of time. So I'm going to try and do a better job to get you to see what I see. So we bought this a week ago. This is very recent. We haven't even made money yet. We're down a little bit. It's up today when I looked at it, and we'll go through this some more. This is the monthly chart of Ark Innovation, and this is I bring this up for a few reasons. Cathie talks all the time. Well, we have a long-term horizon, 5 years. Well, over the last 5 years, she made you 7%, which is basically zero given the volatility that she offered up. So here's this line right here. You bought it 5 years ago. You just now started to make money. Think about that. 5 years, you went through this really volatile, crazy phase where basically Tesla turned profitable, got into the S&P 500. It's her biggest holding. She ran it up from 50 to 400 plus. This is the Tesla, and then rode almost all of it back down to 100. So I am not impressed with her sell discipline at all. I'm impressed with mine, and I'll go into that a little bit further. Also, over the last 3 years, this is a complete total plug. Our portfolio is up 21% over the last 3 years. She's down 40. So we try to make money every year. She tries to make over long periods of time. Thus far has failed to do so, and that's the reason why the title of this is Will Cathie Wood Make Money Over the Next 5 Years? And I'm rooting for her, and we'll go into some more about this. The next is my a headline from the Wall Street Journal. Investors are bailing on Cathie Wood's popular Ark fund. The fund has shrunk to roughly $9 billion from whatever the hell it was at the peak. Might have been 20. It's down to $9 billion. And so this is from Jack Pitcher. It's just the other day in the Wall Street Journal. They said they pulled out $717 million net. And I'm going to paraphrase my friend Matt Tuttle, who's been on the pod in the past, and said, millions of investors have horrific losses and finally became fed up. That is an exact quote, but something in the spirit of that. And so when I hear that, I say that's why support and resistance happens. What this means to me is that you've exhausted the sellers. And I put this in a post a little while ago, probably too early, that I thought the sign of capitulation would be when the Cathie Wood acolytes would finally give up the ghost and sell this fund. And it just started to happen. So it took 5 years, it took horrific losses, and finally people say, I can't take it anymore, I'm going to get out. And that's how support is built and how resistance is broken. That 5-year line I showed you. People have finally said, I am gone. And so now you have people like me who say they are exhausted. That is support. We're going to break into new highs, and I want to be there when it happens. And it's just human psychology. Finally, people can't take the pain, and they get out, and then you have these turning points. And so it's a great representation of why charts work, why support and resistance matters, why I focus on it so much, and how hopefully I'm helping you profit from this. The next is the Short Innovation Fund, SARK, S-A-R-K. Matthew Tuttle created this. I had him on the show right as he was launching this. We had just bought it back in the throes of the pandemic, and it basically bet on, I hate that word bet, but sold high and in the hopes that it would decline dramatically and we could buy low. This is the inverse of that. So we basically bought this in the 30s, sold it for roughly a double, and that was one of the main reasons we were up last year while everybody else was down. And my point being is that there are so many vehicles now, 2,000 plus ETFs, where you can express all kinds of views, including shorting highly valued, volatile, money-losing stocks when it's appropriate, that you can pull that off the shelf, deploy it. You don't need a legion of hedge fund analysts to make money when the market's down. And so far I'm proving it, and I want to continue to prove it, but I want to give you my thought process along the way. Next is Tesla. Talk about lightning rods. Tesla's a great one. This is the number one name in the portfolio of ARK. It's 11%. The next in line are Coinbase, Roku, Zoom, and Square. I mean, this is not mom and apple pie stocks. This is high growth, high risk stocks that they're investing in. So Tesla, this area that you see over here to the far left, was the bottom at 101. The bottom at 101. So basically went from, I think 434 was the peak, came down to 101. But then the same kind of thing is happening here in this one important name for ARK. You see this arrow over here, the 50-day crossing through the 200 to the upside. I know I'm sounding like a broken record, but it is almost this simple if you're looking for it and you're avoiding a lot of the noise. The 200-day has just started to turn up. This is this far right arrow, and obviously the stock has run significantly from 100 to 267. They had a lousy earnings call. The earnings were okay. The call was poor because Elon Musk kind of doesn't have a filter and basically said, we're going to be spending a lot more money than you think, and we don't care about margins. Again, I'm paraphrasing, but that's not what the market wants to hear. And the bear case for Tesla has always been, and I've made it, is it's fun going from 0% market share to 70. Now everybody comes after you, and it gets more difficult. Price increases, squeeze margins. That's going to be a problem. And the bull case is that, well, we're going to get as many cars out there, and then we're going to sell them software upgrades and other services, charging fees, etc., to make money down the road. And sometimes we make things too complicated. So I put in here another link description in the notes. This is Gene Munster, who's an analyst at Deepwater Asset Management on CNBC. It seems like every 11 minutes. And it's a very short clip. I recommend you listen to it. At about a minute 20, he goes into what really caught my eye as I was doing 40 different things. Tesla's margins are going to improve in the back half of the year, but then he basically said, and it was a debate. He was the Tesla bull. Dan Nathan and Guy Adami were the usual Tesla bears. I think Danny Moses was there as well, if I recall. And he said, just keep this simple and let's think long term. Our EV is going to be about 100% of the market in 10 years. And, okay, maybe it's not going to be, but it's going to be a big, big share of the pie. So is Tesla better at EVs than everybody else, especially the incumbents, General Motors, Ford, et cetera? Okay, that kind of makes sense. And do you think the incumbents can catch up? And he says, not a shot. I'm paraphrasing, but it also kind of makes sense. And we're also hearing, a lot of the travails as traditional car makers try to make EVs that people will pay for. And then he says, well, if they get 10% share of that market. Now, Musk says they want a 20% share of the EV market which he thinks is going to be the auto market in 10 years. That's $1.1 trillion of revenue for Tesla, which is doing $130 billion now. So what's that, 8-9 times? So that's very simple. That's longer term than I think, but it also makes intuitive sense. And my tiebreaker here is the chart looks good and is really starting to look good. And so we're climbing this wall of pessimism, valuations and margins, et cetera. And the fact that they had a horrible earnings call and the stock took it pretty well in over the long scheme of things, I think is kind of interesting. So I'm rooting for Tesla, Coin, Roku, et cetera. And I know this is, for value investors, you might as well turn the channel because I don't think value investing works very well. So that's another topic for another day. But anyway, hope that's helpful. You do your own due diligence. This isn't financial advice, but I own ARK. I ask you to look at it. You make your own decisions, and you fire your questions and comments at me. Please go to my YouTube channel, hit subscribe. Please share it if you think I've earned it, and I really appreciate it. That's today's top story. Now, it's time to check the mailbag.
Incoming! There's a letter in your mailbox.
You got mail.
William from Canton, Mass. came in and said, I think a good way to participate in the semiconductor bull market is Photronics, PLAB. How does it look to you? More mail. And I think it looks good. I think you're right. They make it get a little bit wonky. They make photomass, which basically is sort of a pick and or a shovel to sell to the ultimate semiconductor makers. Taiwan, NVIDIA more designs than manufactures. The Intels, the Texas Instruments, you get the idea. And so I think he does have a value bent if I'm putting two and two together. But you see here from first of all, Jack, thanks for the tip. This is a hold for me. And I will almost never have you come up with something to me, all of you, and I'll say that's a buy. The reason is my buy is very specific, as I just showed you with the ARK example. It's a new high, it's on a 150% increase in volume, and it's basically that day, maybe the next. And so it's incredibly specific, and it's unlikely you're going to send an idea to me that fits that criteria right then. So, to me, this is a hold. I put an arrow here, that's the 50-day going up through the 200, which means the trend has changed, the 200 is going up, and you have this this top here at around 27. I think we're going to probably base here for a while. Maybe earnings make this drive higher. I didn't put the longer term chart here. This isn't an ideal one for me. I like to see staircases. Build a base, hit the staircase, hopefully on some good news, whatever it is, new CEO, new product, earnings, and then it builds a base. And I want to see that staircase. In this case, it's more of a sawtooth, kind of all over the place on the longer term chart. And that might be because these are lumpier orders, tougher timing, and so if you pull forward or delay a sale, it might create more excess stock price movement as earnings and revenues miss or beat. Now, I think the trend in the semiconductors has been good. It's been good for this stock. That's why it's a hold. Stay tuned here for my sell discipline. Keep this in front of me. So far, I think you've got a winner. Congratulations. I think that's great. But I would be nimble and be ready to now, this is also fairly cheap at 13 times, grown at about 13%. So I think valuation is certainly helping you here, but I think it's always kind of had that multiple. And if you have earnings misses, you got to be braced for pretty big drawdowns given the history of the stock. So come back at me with more if you need it. I hope that's helpful. Jackie from New Haven, Connecticut. asked me, I'm a Sharescoops subscriber. Gus Christensen, the CEO of Sharescoops, was on with us not too long ago. They recently highlighted Domino's Pizza, DPZ. What do you see in the chart? And it's a good-looking chart. And I'm going to put aside my bias, I hope. I'm not going to. I'm going to just tell you. I think the pizza's fair, and the service is fair. And people try to say, oh, it's a tech company now because they have an app. It's a pizza company with okay pizza at best. So, I've been lazy too, and I've had a couple too many beers and don't feel like going out. And so, I've succumbed to Domino's in the past. But the earnings report was excellent. I think the prior one was a big disappointment, and so the expectations have been dashed. So you have a gap up here. It looks like 350 up to about 380, and then the peak was 410. So now we're building the next staircase, 380 to 410, and I want it to kind of stay in there. This is that old, Wall Street maxim that all gaps are filled. I don't think that's true. Yeah, probably eventually, but I don't think that's germane. So 380 to 410. If you see it much below there, I'd get a little bit antsy. Again, this is a hold. If I didn't say that at the top, I'm sorry. This is a hold. I get more enthusiastic if they have another great earnings report. The stock goes up through 410 on big volume. It's got a 26, 27 PE, growing at 16% or so. Of all the gin joints in all the world, I'm not going to walk into this one. And that's a way too old reference for all of you, and I don't know why I went there, but that's where we are. Humphrey Bogart is turning over in his grave right now. Okay, this is from Gloria. Barbie is a hit. Why is Mattel not moving? I love this because it's so logical. Oh, my God, it's Barbie summer. Everybody's in pink. The box office is monstrous. Barbieheimer is become a meme, and so it's good for Mattel. Well, yeah, it's good for Mattel. They make licensing fees off of all these things. I don't know the numbers. I doubt they disclose them with much precision, is my guess. But you have sort of a lukewarm response, a bounce off the lows as Mattel looks like it's a hit. It's topped out here at 21.23. But one of the things that I want you to think about, number one, earnings are coming up today, tomorrow. So we'll find out a lot more. But my suspicion is this is not recurring. You get a PE of 1, price earnings of 1, when there isn't future growth that you can see down the road. Yes, I suppose there could be a Barbie 2, and yes, they could have some, extensions and what have you. Maybe a Christmas season that's better than normal with easy comps last year, that kind of a thing. But Barbie's been around for 70 years? I forget the exact number. And, Margot Robbie's adorable, but I just don't see, much sizzle beyond here. So always ask yourself, is this a one-time phenomenon or is it a recurring phenomenon that people will pay for into the future? And I think here you have a hold, but this is maybe the weakest hold where if my self-discipline is invoked, I would start getting out. And if you want me to go through that anew, I seem like I go through that every episode, so I'm backing off on the nuts and bolts of how to sell stocks. But so many people skip over that, which is kind of important because that's how you lock in your profits. So, Gloria, that's what I think of Mattel. And again, come back to me, Bakes at StockMarketAuthority.com with any questions, expansions that I should make. That's it for the mailbag this week. If you want to write into the show with any questions or comments, email me at bakes@stockmarketauthority.com. Even better, leave me a voice recording and we can play your question on the show. Let's take a break. When we come back, we'll take a look at the Stock Market Authority portfolio, and I'll give you this week's Bakes Takes.
Do you want to become a better investor? Do you want to learn how to make money in both up and down markets? Then you need to go to StockMarketAuthority.com and sign up for our free newsletter today. Stock Market Authority is run by award-winning investment manager Kevin Bakes Baker. His aim is to save you time while teaching you how to be a better investor. Bakes saves you time by diving into all the latest stock market news and information so that you don't have to. He reads all the latest articles, analyzes the charts, and listens to all the relevant podcasts. And then once a week, he gives you a breakdown of what's happening in the market. Stock Market Authority is constantly outperforming the S&P and the HFRX. Bakes is going to share with you his weekly stock observations. He'll give you concise insights and show you how to lock in profits and minimize losses. Stock Market Authority is making money in up and down markets. Wouldn't you like to do the same? So join now and let Bakes show you how. Head on over to stockmarketauthority.com and sign up for our free newsletter today. That's stockmarketauthority.com, making money in up and down markets.
And we're back. Today we're talking about Come Sail Away, Ark. You see the boat, Ark, nautical reference that I wove into that? Isn't that good? I tried to get Come Sail Away, but the Styx lawyers came after me pretty hard, so I put that on the QT. We'll see if their next 5 years is better than the last 5 years. Anyway, here's my portfolio. I like being able to pull things like Ark off the shelf, but since inception, we're up 2.64 times the hedge funds. And I use that because we try to make money when the market goes down. They're usually not as good at it. We were up last year. Most of them were down. We try to make money every year. We're that simple. My wife and I, we have the S&P 500, and then we have the Stock Market Authority portfolio. And what I hope appeals to some of you is that smoothing mechanism. The market goes up over time. It's up 70% of the time, but the 30% stinks, and sometimes really stinks, and a lot of people psychologically can't handle it. And so when that happens, I want to be able to say, hey, I have a way for you to make money every year and hopefully have less angst and anguish over your finances, knowing that you're going wherever the market tells us to go around the world to have you profit every year. And so it's a wonderful experiment. So far it's working. And to be blunt, your money manager does not have the same goal. His job is to lose less in down years, period. Unless there's you got Bridgewater as your asset manager. So we have a very different approach here. I take it seriously. I don't take it that seriously. I take what I say to you seriously. It isn't financial advice. I don't know your situation inside and out, but you're smart people, and you knew that, and you don't need my lawyer to tell you that. So, at the end game, I want to become an ETF that I run. That's your hedge fund that you pull off the table and you put in your retirement account and watch the S&P go up and hopefully me go up every year when the S&P is down. So that's my end game, and I'd love to talk about that more. So right now, I can't be more transparent. Here it is. We're 10% in Ark, as I mentioned. I gave you all the rationale. We're 10% in uranium, URNJ, the smaller uranium miners, and I think this is going to be like when we started this in the middle of the pandemic. I think we're going to make a lot of money here. The spot price is just under 60. We get that to go to the prior high of 130, which I think is likely. The spot price doubles, and then the earnings of the miners just absolutely explode. Haven't confirmed that yet, but the long-term trends in uranium are very positive, and I'll go into that more in depth as I pull the trigger. 10% in Argentina has been a very pleasant surprise. We've been 40% in AI, technology, robotics, machine learning, etc. We're 10% in Bitcoin via the Grayscale Bitcoin Trust, which trades at a discount to spot Bitcoin, and we're looking for the potential of a spot Bitcoin ETF that makes this whole market rip wide open. 10% the Bitcoin miners, and we're 10% in Ethereum. Very unconventional portfolio, but again, we're unconventional because we want to make money every year, and the conventional people don't. So please stay tuned. We're down this year. Frankly, we probably should have taken everything January 2nd, sold it because we were pretty short SARK and the SPACs and what have you. And so we didn't do it perfectly. We did it well, but we didn't do it perfectly. But frankly, there is no perfect. So we're fighting our tail. We're working our tail off to make everybody money this year. And I'm going to go through recent observations, improvements in the portfolio on my social media posts and in my newsletter. And please subscribe, follow, and share. That's how we're invested on July 26th. I cannot believe how late it is. Let's get into this week's Bakes Takes. Charlie from New York came to me and asked, "Is the worst over? Is this a dead cat bounce?" And I'm kind of surprised because Charlie, I know you're in the financial world, and the fact that the technical action has improved so much, and people still think it's a head fake, frankly, gives me encouragement because. And this is why I like charts. The charts win most of the time. They just do. And, you mentioned it's just a dead cat bounce. No, it's a bull market. And you go back here, this arrow that I drew when the world was coming to an end in the middle of COVID, and that's a dead cat bounce. And frankly, it's usually a dead cat bounce is like snap yesterday. You go down 17, you bounce 2 today. That's a dead cat. You can understand the imagery. I don't need to get graphic with you. But another great point, Patrick O'Shaughnessy has a great podcast, and Josh Kushner was on there, and he had this great line that I've been looking for an excuse to use. And Josh's dad told him when there was, a pretty bad period, the world doesn't end very often. And, how many times do we sit there and we're terrified, night sweats, and the world doesn't end very often. So, yes, we're human, we've got fight or flight, it's all, hardwired into us, but the world's pretty good and getting better all the time, and the world doesn't end very often. So I bring that to your, for you to consider. Anyway, pardon me, my suspicion is that you're listening to a lot of the things that I am, Charlie. The inverted yield curve means we have a recession 100% of the time. The Fed has more work to do. It isn't the inversion of the yield curve; it's the re-steepening. And I'm telling you, the market doesn't care. And I mean, look at these lines here. This is the same sort of thing we talked about. This is the S&P 500. The 50-day goes up to the 200. The 200 starts turning up. The volume picks up for the breakout to the upside, and we've taken out the 430 level absolutely decisively. So it's an uptrend. We're threatening new highs, and the fact that people don't want to believe it or hate it, I kind of like it. So maybe that makes me weird, but I've been doing this a long time, which has made me weird. So it's a bull market until further notice. If my sell discipline kicks in on individual stocks, especially the big ones, or the S&P overall, I will let you know. Just like I talked about Cisco back in 2000, I know how to do this. So stay tuned, please. So it's a bull market, period. Charlie asked about election risk and, what happens to the market if there's a Biden-Trump rematch. And I've talked about this before, and I want to be as subtle as a 2x4 again. The stock market picks presidents, not the other way around. Presidents have virtually no influence over anything, frankly. So I went back to this chart goes back to the 50s, but I'll go back to my prior discussions. From 29 to 32, the stock market got crushed. That president had about as much chance of getting reelected as I did. So FDR comes in, and the market goes up from there because everything had only one place to go, which was up. And the World War II helped, frankly. And he was there for 3.5 terms, and he would have been still the president if they could have found a way for technology to do so. So take a look at this right here. I wish it wasn't red and blue, because that's obviously Democrat and Republicans. But a couple things. The market's up most of the time, and when the market's down, we throw the president out. Okay? We threw it out with Nixon in 74. Ford, poor guy, didn't have a shot. He was a one-termer. And Carter, 76 to 80. The market was down. We said, get this guy out of here and send him back to Georgia to plant peanuts. And it just happens over and over and over again. Frankly, the one exception is Trump. So he had to work hard to take an up stock market and turn it into a loss. Now, maybe that's because of his personality or whatever, but I don't care about what ideological stance, what they think about the issues, anything. We are economic animals, and if we feel better about our wallet, we keep the president in, and if we don't, we fire the bum. And that's what's going to happen this time as well. So spend no time thinking about Biden, how old and feeble he is, and Trump, what a crazy son of a gun he is. It does not matter. Now, if the charts roll over, I will act accordingly. But right now, the market has spoken. The trend is up. It's Biden's to lose, and we'll see what happens. But politics, don't let that influence your thinking about investments one iota, ever. Am I being vague? No, okay. Hey, we interviewed a CEO last week, the CEO of SciTech. I went through my interview process. I want to hear what you think about that. You want more? Do you want less? Please give me your feedback. Those are my big takes for this week. And as we close out today's show, I always like to end with some much-needed levity. Please click on the link in the description below. This is Nate Bargatze, the worst time traveler. I just listened to it again on the way up here. Mom and Dad, he's clean, and he's very funny. And it's 5 minutes or so, and well worth it. And I hope you've enjoyed the show. I want to see you next week. I'm going to go see Pink in Fenway with some of my best friends from Philadelphia. And it is good to be alive in America, and I'll see you next week. Take care. Bye now.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.